introduce our next esteemed panelist, Mr. Manish Lalwani. Manish is the
Actually, 1 minute before you proceed, may I request all the panelists to please keep answering the questions which are there in the chat box. So a lot of questions are coming. So I would just request you to type the answers and continue. Thanks a lot, Sakshi.
Thank you. So Manish is the managing director at Marsh India. He has more than 20 years of professional experience in banking, life, general and health insurance, and also in the financial service industry. Prior to Marsh, he was the senior vice president at Tata AIG Life Insurance. He's an alumnus of the famous Harvard Business School and MIT School in US. Manish, I will like to address the question to you. And it's not one, because I think insurance plays a very, very important role during this time. So I'll just like to address you maybe 3 questions in one question, but you will have 10 minutes to answer that. So healthcare is in normal times is imperative, and during a pandemic, it is absolutely indispensable. How did health insurance act as a rescuer during the second wave of pandemic? That is the first part. The second is India has one of the lowest health insurance penetrations in the world. And in times like these, how did organizations respond from an employee benefit perspective? And the third and the last part is, being in the field of risk management and insurance, what do you think will be important for corporates going forward from a preparedness perspective? As we all know, and we think that the third wave will also hit. So that is small 3 questions in one question. So over to you, Manish.
Thanks. Thank you so much, Sakshi, and good afternoon, all listeners. It's great to be here on this panel with my fellow panelists. Thank you, Gaurav and India Healthcare Leadership Forum for having me on this panel. Addressing Sakshi's questions, I will, as she said, let me try and address these in 3 parts. First, let's just spend some few minutes on evolving people risk in the wake of the pandemic. I will then share a few best practices as to how did health insurance really rise up to the pandemic adversities here in India, and then just a few comments on resilience and bouncing back, and how can organizations look towards the future given what we've seen in the last couple of years. So as Marsh & McLennan, we work with clients across a broad spectrum of risk management and insurance issues. And we are in a sort of an advantageous position, I would say, because we get to see an outside-in view and as to how our organizations really addressing these challenges that are facing them in the wake of all these risks that are coming up, right? And so, yes, that does give us a bit of an advantageous position. And let me tell you, COVID-19 has really put people-related risks firmly in the boardroom agenda. First of all, it was always a risk, but it's now center stage in boardroom agenda. And employer-sponsored health, risk protection, and well-being plans are now considered central pillars of employee value proposition. You look at promoters, you look at CEOs across organizations, they have realized that employee well-being is central to business continuity, safety and employee performance, and not just these, but client and customer experience, reputation, and ultimately the business bottom line. So it all revolves around employee well-being and safety, and that double underlined during this pandemic. So at Mercer Marsh Benefits, we conducted a global research earlier this year around emerging people risk in the wake of the pandemic. It had more than 1,300 respondents across 9 regions of the world, 36 industries represented. It's a fairly good spread. Now, what were some of the key risks that came up? Top risks, I would say. Talent attraction, retention, engagement will continue to be a huge risk and an area to work on. You have increasing costs on health, risk protection, and well-being. And we are already seeing there is an increase in cost, and organizations have to look at how do we really optimize and leverage the best. Then you have increasing technology and cyber risk, that is also going to impact human capital, social media and things like that, and there are related risks. You have deteriorating mental health. That's come up as a big risk going forward. And then this one is new, workforce exhaustion, right? So you have fatigue, and we've seen enough of employees getting fatigued out, being on Zoom calls and being on, virtual engagements across, no time foundations, they're working long hours in spite of working from home. So workforce exhaustion is going to be a key risk going forward. Now, given this backdrop, let's talk about how did really health insurance rise up to the occasion, right? And I'm sure all of you know, in India, insurance penetration continues to still be abysmally low. Health insurance, particularly, close to just 3% penetration. Okay. In urban areas as well, we believe only 81% of people, they don't have insurance. So only 19 actually have insurance, 19%. And in urban areas, that's 86%, and rural areas, it's actually 81%, right? So abysmally low level of penetration still. Now, having said that, the health insurance segment really rose up to the occasion in the recent pandemic, I would say. So, all insurance plans, the health insurance plans responded to hospitalization claims. First of all, that's very important. So in India, pandemic is not an exclusion in your health insurance policy, whether it's a group policy or an individual policy, right? The regulator played a very active role. So the regulator came up with guidelines and it advised insurers to come up with standard, COVID care plans. So you had Corona or COVID Rakshak plans and a COVID, coverage plans that got introduced. Okay, there were a lot of enhanced benefits that got introduced by insurers. So you had pandemic buffers, you had non-medical expenditure, you had PPE kits getting covered, you had oxygen concentrators being covered. Of course, you have to buy those covers and you have to select those, but those were made available to people. Home care got covered and things like that. Insurers were asked by the regulator to settle claims on scanned document basis. Okay, so that was again a quick response to what was required. And then you had host of voluntary plans, top-up programs, etc., etc. Now, one area that got significantly impacted is the group term life insurance, right? One is health insurance, but then you have term life insurance. And you'll be surprised to know term life claims went almost 10 times up in the last 2 months. It's a sad statement that I'm making. Organizations who had 2 to 3 deaths in the entire year last year had almost 20 to 25 deaths in just 2 months. That's really sad. Okay, so term life insurance has really, shot up. The rates have shot up. The capacity is dried up. That's an area that we need to look at, and that's an area that organizations to look at as they come up for renewing those contracts going forward. Now, as well as Papia mentioned earlier, the velocity of this wave 2 was very, very steep, right? In wave 1, we saw people staying indoors, not going out for hospitalization. There was lockdown, right? So claims actually came down. But in wave 2, just in April and May, we see almost 17 to 22% of claims being COVID-related claims across organizations. So that's a significant, contribution. And that's I see that to be a good side of health insurance as well, right? Like 1 out of 4 claims is a COVID claim, and insurers are paying all those claims, right? So that's a good sign as to how the sector has really come out. We've seen organizations, do a lot. They've been resilient. They've bounced back. They brought in employee care programs, and across employee benefits, 9 out of 10 organizations have actually introduced something new, in terms of employee benefits. And we bucket them into 3: financial support, you have leave support, and then you have employee connect. So in financial support, we've seen organizations set up benevolent funds, salary advances, child education support if a member of the organization has demised. We saw pandemic buffers. We've seen global headquarters actually send funds to India, head offices to tide over the situation, and even send medical equipment. So that talks a lot, right, on the financial support side. On the leave side, we've seen organizations extend uncounted leaves, extended leaves for caregivers, and vaccine days off, bereavement leave, and things like that. And then finally, on the Employee Connect, organizations have extended EAP programs, digital health programs, COVID task force, helplines, so on and so forth. So across the spectrum, we saw employers really rise up, and we saw a lot of collaboration between administration, risk management, HR, finance. Everybody got together to really help the employees. So finally, I mean, one thing is clear, organizations must be resilient as we look into the future, and resilience, to my mind, is not just business continuity planning. It's not just the capacity to absorb negative events. It is how do you really quickly respond, and then how do you really capitalize on these threats and capitalize on opportunities. We saw a number of companies, mid-segment, large companies, companies which responded well and were able to convert into opportunities and help more client with goodwill, more customer goodwill, and as well, serve the shareholders as such, right? So risk going forward is going to be even more complex. It is no more going to be a single vector event. What started as a healthcare issue became an economic issue, involuntary migration, credit issues, food shortage, lockdown. So, we have to really have a comprehensive view to forecast risk events and then have strong plans based on data, based on organizational agility, and most importantly, collaboration within the organization. So, I'll kind of give a pause here. I just like to underline with a closing comment that if you look at S&P 500, valuations, I mean 500 S&P 500 companies, 90% of that value now comes out of intellectual, intangible assets. Way back in 1975, it was just 17%. Intangible assets contributed to just 17%. But now it's about data, intellectual property, brand, reputation, and most importantly, customer relationships. So relationships matter. And that's what, resilient organizations have to protect and really capitalize on. So at this stage, I'll just give it a pause. Thanks, Akshi. Back to you.
Thank you, Manish. I think you very rightly said that the organizations need to be very resilient, and collaboration is the only solution. Nobody can work individually or just in silos. Everything needs to be collaborated and put right. Thank you so much for your viewpoints. And now moving to the next panelist, I am